Last week, we got the confirmation that Donald Trump has been elected as the next president of the United States. And since then, the stock market has been rallying like crazy. So today, we are going to break down why Trump's victory is driving this market surge. Let's get started. Welcome back to Dimes to Dreams. My name is Ankit, and in today's video, we are going to look at what Trump's victory means for the stock market and how his proposed policies might shape the market moving forward. Before we begin, quick disclaimer, this video is not about my political opinions. We are only here to look at the stock market's reaction to Trump's policies, or I should say proposed policies, as president. And as always, this is not financial advice, so please do your own research before making any investment decisions. So to understand why the market is rallying, we first need to understand the major policies that Trump has proposed. First on the list are tax cuts. So Trump has made it clear that he plans to lower taxes for corporations and maybe also for individuals. So lower corporate tax means that there will be more profit after taxes, which could lead to higher dividends for shareholders and even more corporate stock buyouts. Plus, Trump is expected to push for tax cuts on repatriated cash. So this is a really big deal because US companies with profits parked overseas could bring that money back to the US at a lower tax rate, boosting the US economy. This could also mean more spending and expansion by corporations, which drives optimism for the market overall. Number 2, Trump has expressed his intentions to impose import tariffs to encourage domestic production. So by taxing imported goods, the idea is to make it more attractive for the US companies to manufacture within the country. Now, whether that works or doesn't work is a whole different debate, but potentially this could create more jobs and drive up production in the US, thus benefiting sectors like, let's say, manufacturing and industrials. At the same time, Trump also plans to increase national debt to fund infrastructure projects and stimulate the economy. So this is not just what Trump has told us, but it is also what he did in his previous term. So he took up high amount of debt to fund infrastructure projects. The Federal Reserve's ongoing interest rate cuts also make borrowing cheaper, so more debt is affordable in the short term. However, it is important to remember that higher national debt could also contribute to inflation down the line, and some experts warn that the tariffs could increase the risk of a trade war with countries like, for example, China. So while these policies may be positive for the stock market in the short term, we have to keep in mind that they could eventually lead to inflationary pressure or even global trade tension that might weigh on the market later on. Number 3, environmental deregulation. So another area where Trump's policies are likely to have a significant impact is environmental regulations. So Trump is expected to loosen restrictions on industries like oil, gas and coal, which might be bad news for green energy stocks but potentially great for traditional energy sectors. So industries such as logistics and transportation, which rely on oil and gas, may also benefit from these policies. Investors in renewable energy stocks, however, may want to be a little cautious, as these stocks could face headwinds under a Trump administration focused more on traditional energy sources. At the same time, oil, gas and even logistics companies could see a boost if deregulation leads to increased production and reduced costs. Finally, number 4, this one is really interesting to me and I will also make a separate video on this topic. But Trump has proposed a national Bitcoin reserve, and this can have a huge impact on the crypto market. So this means that the US government could start buying and holding Bitcoin as part of its national assets. If that happens, it would drive demand for Bitcoin higher, which would lead to a spike in its price. And we are already starting to see market excitement around this possibility. Bitcoin price currently stands around 90,000 US dollars, and it has pumped incredibly fast over the last 2 weeks from around $65,000 to $66,000. So for crypto investors, this could be really big. Increased institutional demand, especially from the government, could potentially push Bitcoin's value to all-time highs. So to sum it all up, Trump's proposed policies have set off a wave of optimism across the stock market. Between expected corporate tax cuts, potential trade tariffs, deregulation of traditional energy, and finally even a national Bitcoin reserve, we are seeing these sectors respond enthusiastically. However, it is important to remember that some of these policies could carry long-term risks such as inflation or trade conflicts. So whether you're an investor in stocks or crypto, the key is to stay informed and keep an eye on how these policies develop over time. Remember that the stock market is as much about expectation as it is about fundamentals. And right now it is riding on a lot of hope from this Trump administration. But be prepared for potential volatility as these policies play out eventually over time. Thank you for watching Dimes to Dreams. If you enjoyed today's video, please hit the subscribe button below so you don't miss out on any of our new content. And I'll see you in the next one. Bye-bye.